Welcome to this Stockbox interview with Lincoln Moore, the Executive Director of Dekel Agri-Vision. Hi, Lincoln.
Hi, Mark.
How are you?
Oh, very well, thanks. And yourself?
Yes, doing well, thank you.
Good.
So this is the first time that we've spoken to you on Stockbox. It's great to have you on. Can you give our listeners a brief outline of Dekel as a company?
Sure, and a pleasure to be on Stockbox. Dekel's listed on AIM. Its business is located in the Ivory Coast. We are an agriculture diversified processing and logistics business. We have one fully funded and production project processing palm oil with thousands of small farmers, and we're pretty excited. Shortly, we're in the middle of construction at the moment of a cashew processing plant, which will have a similar model with dealing with thousands of smallholders. We also have two further projects in detailed feasibility. One is a further third commodity, and the fourth project is a clean energy project, which will consist of biomass and solar energy.
Okay, and can you provide some more detail on the collaborative model that Dekel has adopted?
Yeah, what we sort of looked at was what are we good at, and I think myself and our partners have been based down in Ivory Coast since 2001, so we know this country particularly well, and it's in terms of West African countries, it is by some stretch the most diversified and strong in terms of agriculture. People will know perhaps that cocoa, for example, it's the world's biggest producer of cocoa, but it's also strong in palm oil, it's strong in rubber, it's strong in cashews and other crops. So where we see ourselves sitting is in relationship with strong relationships with cooperatives and farmers, and to build a collaborative model with them where we simply partner up and help them with logistics and processing. So relatively farm light, although we do have 2,000 hectares of our own palm oil estates, but really the focus is on being a logistics and processing business diversified over a number of commodities in Côte d'Ivoire.
Okay. And last week you announced an RNS. It was the September Q3 production update. And I know you do these updates very regularly, which is great. And the update you released recently looked really positive. So can you talk us through what the numbers are and why such an improvement?
Yeah, I think until September, as we've gone through this year, there's sort of three main drivers of on the operation side, which then drive the financial outcomes. One is the palm oil price itself, because at the moment this is the main producing business. The palm oil price, the extraction rate, i.e. the percentage of crude palm oil we're able to extract from the fruit is the second one, and then the volume of fresh fruit bunches themselves. So even though COVID did have an impact on palm oil prices in the first half of the year and into the early part of the third quarter, our prices have been materially higher than they were last year. So for Q3, like for like, we were 20% up on prices. Our extraction rate was over 2%, 2 percentage points higher than last year. And those factors have been positive all through the year. But what was really pleasing in September was it was one of the first months this year where our volume of fruit was materially higher than what we had been receiving early in the year. So for September, like for like, we had 36% more fruit. So for us, it is a low season month. We're in the back end of the low season before we commence high season again in January, but a really strong result, and with strong prices and good extraction rates, we're well positioned to even further improve our results as we enter the high season shortly.
Okay. And is the plan for the company to continue giving these monthly production updates? And if so, what can shareholders expect the next set of numbers to look like?
We will at this stage continue monthly. We traditionally did quarterly numbers to try and smooth out some of the volatility within the months, but when COVID set in March, we understood and spoke with a lot of retail investors, and the feeling was, given the macro uncertainties, the best thing we could do for our particular company is provide as much information to the market through that period. So we reverted to providing monthly production updates. So that's been happening since April. In the announcement last week, we confirmed that we'll continue providing monthly numbers until at least the end of the year, given it's still the macro issues are uncertain, and we think it's helpful for shareholders to see how we're tracking, even if there's a little bit more volatility in the monthly outcomes. Mm-hmm. In terms of how we're looking, I guess the second part of the question, we'll be a little careful, but what we have indicated is we did better financially in H1 versus H1 last year. So EBITDA was nearly 2 million versus 1.5 million for the June 30 numbers. And we're quite confident, given the high prices and extraction rate and fruit stabilising, that we'll report a material improvement in our H2 numbers versus H2 last year. So overall, this financial year, we're expecting a significant improvement in our financial results.
And what can we look out for in terms of the up-and-coming news or milestones?
I think there's, obviously, I touched on 4 projects at the start. Mm-hmm. The palm oil, which we've been talking about, will soon enter the high season from mid-January, and where prices are today, $760 a tonne, is a reasonably decent price. We're going back to 19 and 2018, we had prices as low as 500. So good prices as we enter the high season. We're expecting a bit of an uplift in the fruit numbers. I think there was some instability in the early parts of COVID, which may have impacted our high season through March and in April to some degree. So Côte d'Ivoire is weathering COVID and operating as normal. So we expect to see fruit numbers to improve on this year. And if we can continue with the extraction rates, I think this we will look at a financial result for the first half of next year, materially higher than the 2 million EBITDA that we recorded just recently. The other obviously exciting thing is we really are now advancing very fast with our cashew processing construction program. I've got some new photos that we'll share over the next couple of days, but infrastructure works in terms of concrete and groundworks are getting towards the point of completion, and now it's vertical construction of the frameworks of the two major buildings that will be housing the cashew processing facility. Of that facility, 2 of the shipments of 4 have arrived on site, with another one coming within the next 3 weeks, we suspect, and then the final one towards the back end of the year. So I think what shareholders can expect as we move into the next year is to see a processing plant come to fruition, and we remain really well on track in Q2 to be producing and selling cashews, so adding a big step up in revenue to our business.
Okay, it sounds like a lot is going on. And just taking a longer term view, Lincoln, what will Dekel look like in, say, 12 months' time?
I think as I said, I think the palm oil business is poised to see another improvement in EBITDA in 2021 with reasonably strong prices. So that is the core business is going to see a continued rebound. I think the key for us in the early stages of the cashew business, once we start producing in May, June, is we're confident that the gross margins of this business are stronger than the palm oil. So proving up those margins and then being an ability to ramp up quite quickly to the initial full capacity of processing 10,000 tonnes of raw cashews, which in essence would mean that we would have a second revenue stream, which would be broadly similar to the palm oil business, but with stronger gross margins. So, with the potential in 12 months' time looking forward is, a revenue line of our business shifting towards 50 million and EBITDA shifting into the high single digits is the goal. And of course, I did touch on at the start, we had a third commodity. Presuming everything seems to be going to plan on the cashews, and we can see those gross margins sticking as we expect, we're in detailed feasibility at the moment. We would be keen to push the button and start that third commodity project towards the back end of next year.
Okay, well, thank you very much, Lincoln Moore, the Executive Director of Dekel Agri-Vision, for talking to us.
Thank you very much for having us, Mark.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.